The Newsday continues here on One News Now Business. I'm Diego Castro. Here are the biggest stories on the economic and corporate fronts. The country's trade gap widens in October, marking the highest deficit in 3 months. Data from the Philippine Statistics Authority shows that the country clocked a trade deficit of $4.17 billion in October. The decline comes as exports fell by 17.5% to $6.36 billion, a reversal of the 20% growth a year ago. Though the value of merchandise imports also slid by 4.4% to $10.54 billion, the decline is slower than the 14% drop in September. China Bank chief economist says the sharp decline in export growth can be attributed to base effects and a weak global demand. ING Bank Manila senior economist Nicky Mapa says the steep drop in electronics exports weighed on overall exports. The banking industry's non-performing loan or NPL ratio rose to the highest in 5 months in October. Preliminary data from the BSP showed that banks' gross NPL ratio inched up to 3.44% in October from 3.4% in the previous month and 3.41% a year ago. This was also the highest bad loan ratio since 3.46% in May. Loans are considered non-performing once they remain unpaid for at least 90 days after the due date. They are deemed as risk assets given borrowers are unlikely to settle such loans. RCBC chief economist Mike Ricafort attributed the uptick in bad loans and the NPL ratio to rising interest rates. The Asian Development Bank has approved up to $2.1 billion for the construction of the Bataan-Cavite interlinked bridge. The approved financing is equivalent to about 116.8 billion pesos. The project involves the construction of a 32-kilometer climate-resilient bridge that will better link Metro Manila to Central Luzon, Cavite, and other nearby provinces. The ADB says the bridge would reduce travel time from Bataan to Cavite to 1.5 hours from 5 hours previously. The reduced travel time is seen to help lower annual greenhouse gas emissions. The ADB says the project would be funded under a multi-tranche financing facility with a first tranche amount of $650 million. We'll be back with more stories after the break. Keep it here on One News. You're still watching One News Now. I'm Diego Castro. One expert suggests that the Philippines seek leverage over China, including economic ones, amid heightened tensions in the West Philippine Sea. In an interview on The Big Story, retired AFP Rear Admiral Romel Jude Ong admits that the Philippines cannot go up against China one-on-one. Ong says the country can upgrade its military capabilities and partner with like-minded nations if it wants to push back against China. But he also proposes spotting China's vulnerabilities and seeking leverage over Beijing. Ong suggests looking into possible economic sanctions in areas like trade.
For example, question, Chinese maritime traffic or Chinese commercial maritime traffic passes through the Philippine archipelago. How do we leverage that fact? Okay? Kasi ang katapat nun, yung energy and food security natin yung tinatamaan pag-encroach nila sa ating exclusive economic zone. Second, consideration, we are the number 2 source of nickel of China. How do we leverage that? Okay? That issue. So we need to look at levers na we can use to our advantage outside of yung military confrontation.
Piston condemns Marcos's decision not to extend the December 31 deadline for PUV consolidation of jeepney operators. Speaking on The Big Story, Piston National President Modi Floranda questioned the basis of Marcos's pronouncement. Floranda also refuted Marcos's claim that 70% of all operators have committed to consolidate under the PUV modernization program. The Piston president cited the LTFRB and DOTR in saying that only 26% of jeepney drivers have been able to comply with the modernization. Floranda likewise asserted that their opposition to the PUV modernization is not against the concept itself. They say they are questioning the flawed approach and are criticizing the need to purchase expensive vehicles. Piston had earlier announced a strike for December 14 and 15 in protest of the consolidation. The group is also planning to question the legality of the PUV modernization program before the Supreme Court.
Ang sinasabi natin ay wala naman tayong tutol sa pinang-modernization. Ang linalabanan lang po natin dito yung maling mandana ng modernization na bakit natin kailangan bumili ng ubod ng mga mamahalin ng mga sasakyan at bakit natin kailangan magbuo ng corporation o magbuo ng kooperatiba kung ang layunin lamang po ng gobyerno ay para ayusin ang muda ng ating public transport.
Let's now take a quick look at some corporate headlines we're watching. SP New Energy Corporation has acquired the stake held by its partner in Terra Solar Philippines for 6 billion pesos. In a disclosure to Philippine Stock Exchange, SPNEC said it has already executed a deed of absolute sale to acquire the shares from Prime Infrastructure. This deal grants SPNEC 100% ownership of Terra Solar. Norwegian-Filipino power company SN Aboitiz Power Group targets to kick off operations of its 24-megawatt battery energy storage system project before the end of the year. The company said it is waiting for its certificate of compliance as it hopes regulators will cooperate with them and have it ready for the reserve market for December 26. The Federation of Philippine Industries decried attempts calling for the split of the franchise area of Meralco, calling the move counterproductive and a vicious attack. Early this month, several congressmen led by Representative Dan Fernandez alleged that Meralco committed violations in its weighted average cost of capital. In defense, Meralco said the fair assessment of WACC is determined by the regulator. And those are the top business stories of the hour. I'm Diego Castro. Join us again at 2 p.m. We are One News, all sides, all the time.